Welcome back, everyone. Next, we have UR Energy Inc. It trades on the New York Stock Exchange American under the symbol URG and on the TSX under the symbol URE. It's a uranium mining company operating in the Lost Creek in-situ recovery uranium facility in south central Wyoming and has produced and packaged approximately 2.8 million pounds of U3O8 or yellow cake from Lost Creek since the commencement of operation. Happy to welcome back the CEO, John Cash. Nice to see you again, John.
Yeah, you as well. It's good to be back with you guys. It's an exciting time in the nuclear space and looking forward to doing a presentation with you guys today.
All right, the floor is yours. Call me back when you're ready for questions.
All right, very good. Thank you, Anna. So we'll start off with just a regular presentation, then we'll be glad to answer questions from the listeners toward the end. But we always start off showing a picture of our Lost Creek processing plant in central Wyoming. We've been up and running now for over 10 years, so we'd like to show that we're a real operating company. We are producing pounds. We've been at this for a long time. The drums there on the right, that was our first shipment that went out back in 2013. So my attorney will be happy that I put up the disclaimer. Be aware there are risks to any investment, including investing in uranium mining. We encourage you to do your homework, and I may make some forward-looking statements throughout the presentation. So we've had a large influx of interest in the uranium space because the price has been coming up very nicely over the last couple of years. So a lot of new faces, a lot of new investors in our story. And we are an in-situ miner. We don't use conventional methods. So we've put in a few slides in the presentation to kind of highlight what it is exactly that we do, so investors have an appreciation for the technology we use. It's very different than conventional mining, and the technology we use was developed here in the U.S., here in Wyoming, in the 1960s, and it has spread now throughout the world, and over half of the world's uranium is recovered now using the in-situ technology. So in-situ means, again, in the place. We don't move rock. What we do instead is we drill water wells into the ore zone. As you see on the diagram there, the wells in blue, those are injection wells. We inject water and two gases into the ore zone. And those two gases are CO2 and oxygen. That dissolves the uranium, and we simply pump it up to the surface through the yellow well in the center. It is a solution. It's not a sludge or slurry. If you were to look at it in a glass, it would look just like drinking water, but it's filled with uranium. We utilize this technology for two basic reasons. Number one, economics. It is by far the cheaper way to recover uranium if the ore body is amenable to the technology. And so if you looked at the cost curve of all uranium production globally, you would see on the left-hand side, the cheapest production in the world is almost exclusively in situ. And on the right-hand side, the higher cost production would be almost exclusively conventional mining. The other reason we use the technology is simply because of the environmental footprint. The photograph here is of our operating Lost Creek mine. That is the actual mine in operation. And those boxes you see out there that look like beehives, those are the wellhead covers. When we get done mining, we'll simply remove those, take the top of the casing out, reclaim it. Within a few years, you won't even be able to tell we were there. So the environmental footprint is minimal. Just a couple of photographs of some of the infrastructure. This is the distribution center or a header house where the wells flow into and out of for collection. And again, this is the processing plant where we utilize ion exchange to recover the uranium. The photograph here is about 1/3 of the area of the processing plant. So you can see how small of a footprint even the processing has with this technology. And it also keeps the capital cost relatively low. Here's a photograph of a shipment of yellow cake we sent out just a few weeks ago to one of our customers. And I'll focus now really on our two flagship properties. We have other properties, but I'll focus really on the existing production and the near-term production, which is really the investing thesis for UR Energy. The first project we have that's up and running again is Lost Creek. It's been running now for over 10 years. We have allowed production to decline for a few years post-Fukushima as the demand for uranium declined. But now that the demand is increasing rapidly, and because we're seeing higher prices, we made the decision early last year to begin ramping production back up to commercial levels. That decision was reinforced by our contract book. At that point, we had signed a total of 3 long-term contracts with major utilities. Since then, we have signed 3 more additional contracts with major utilities. We're under NDAs, so I can't say who those are with, but if I said their names, you would all know them. They're major electric generators here in the US as well as in Europe. We've got a great resource in the ground at Lost Creek, over 12.6 million pounds of measured and indicated resource, and an additional 6.1 million pounds of inferred resource. We've got a really good reputation at Lost Creek of being a low-cost producer, and I'll show you some actual data on that in a few slides so you get an idea of what our cost of production is. We have a 13-year remaining mine life at Lost Creek, so it's a long life project. That's assuming we do no more exploration, and we have a lot of room to explore at Lost Creek. The facility is fully licensed, built out. The mill itself has a capacity and a license at 2.2 million pounds per year. The mine that's attached to it has a licensed ability of 1.2 million pounds per year. So you can see we overbuilt the mill. That was intentional, and that's so we could bring in material from competitors in the area, but also from subsequent mines that we install. For example, switching gears now to our next project, Shirley Basin, we want to be able to build out Shirley Basin as a small satellite and bring the ore from there, the loaded ion exchange resin, over to Lost Creek to utilize that infrastructure there. That keeps our cost of construction, our capital cost at Shirley Basin, very low. And so we're excited to be able to utilize that system, kind of a hub and spoke model, if you will. So the licensed capacity at Shirley Basin is 1 million pounds per year. It is fully permitted. We have all of our major permits. We are literally on the ground right now installing our first monitor well ring. Later this summer, we'll be upgrading the existing road that goes into the site. And early next year, we'll begin construction on that facility. We expect we'll be done with construction late 2025, perhaps early 2026, but right in that time frame. And at that point, we'll be able to begin ramping up commercial production. The cost of production at Shirley Basin will be a little bit more than at Lost Creek because it's a smaller deposit, but we're still looking at a C1 cash cost of just over $24 a pound. Lost Creek, we're looking at a C1 cash cost of a little under $17 a pound. For many of you that are new to this industry, just to put those costs into context, the spot price right now is right around $94 a pound uranium. And the long-term market is right around $80 a pound. So those numbers I've given you, those are C1 cash cost. If you look at the all-in cost for Lost Creek, we're looking at around $38 a pound. But you can see 38 still is a lot lower than 94. So it's a great time to be ramping up production at Lost Creek and then building out Shirley Basin and getting it into production. So I'll switch gears just for a bit. I'll talk about what's going on globally with the nuclear industry. Certainly a lot has happened in the last 2 years as the world moves more and more toward nuclear power because it's carbon-free energy generation and it's extremely reliable baseload energy. Here in the US, we already get greater than 20% of our electricity from nuclear power. Literally just a couple of weeks ago, Southern Company down in Georgia started their second new reactor. And so it's in commercial production at this point. So the industry is growing in the US and globally. Around the world, there are 440 reactors operating, and there's a lot of growth coming with 60 in construction and 92 reactors on order. All of that new build and that growth in the industry results in additional demand for uranium. So last year, the demand for uranium was 171 million pounds. Going out to 2040, the estimate is that demand will grow to 338 million pounds. So you can see over the next few years, there is an expectation that there will be tremendous growth in demand. And we are ready at UR Energy to help fill that demand. And there's so few other companies out there in the nuclear space that are in the position we're in, where we're built out, we're operating. I can almost count it on one hand how many companies out there are being able to do that. So would point out too that one additional source of demand that we expect in the coming years is small modular reactors. I don't want to overplay that, but we do expect within a few years that we'll begin to see an increase in demand as small modular reactors are built out in the US. We're expecting on the order of 300 new small modular reactors in the US by the year 2050. Right now, not too far behind me, I'm sitting in our office in Casper, Wyoming, but just behind me, not too far, Bill Gates's company, TerraPower, in conjunction with Pacific Power, which is owned in part by Warren Buffett, they're building out a small modular reactor, and they're making good progress on that. We can't talk about the nuclear space without talking about geopolitics. Russia's invasion of Ukraine was a real game changer, and it put a lot of uncertainty into the market because Russia is a major global processor of uranium conversion and enrichment services that are critical to our industry. So that supply has been called into question. Beyond that, their neighbor to the south is Kazakhstan, a former Soviet satellite, a part of Russia. They are one of the largest uranium miner in the world. They supply nearly half of the world's uranium. So we're not sure how much overlap there is with Russian influence into Kazakhstan, but it is a concern. Certainly, Russia and China, their influence in the uranium mining sector has been growing in the past few years as they've gobbled up projects in Kazakhstan, as well as several countries within Africa. The Western world is attempting to ramp up production to meet that supply gap, and there is a significant supply gap right now. Notably, Cameco out of Canada is working to ramp up production, but they've had struggles ramping up in Canada. But even when they do get ramped up, and I do believe they will be successful, but even when they do get ramped up, their production is nowhere near large enough to offset any potential supply disruption from Kazakhstan. You have all of these issues, and then more recently, you layer in the coup in Niger. Niger supplies about 4% of global supply. Doesn't sound like much, but when the market is already tight and you call into question an additional 4%, it does have an impact on price and has had an impact on price. Here in the US, we've had a really good support these last 18 months to 2 years from Congress, both Republicans and Democrats. I'm not going to read through the top list there, but that's all the recent successes we've had getting support from Congress to support the nuclear industry. The bottom three bullets, again, I'm not going to read all of those, but I will highlight the first one since it's very recent. But last week, we got news that the U.S. Senate, in unanimous consent, all 100 senators, Republicans and Democrats, supported a ban on the import of low-enriched uranium from Russia. The House had taken a similar action previously. Again, it was unanimous. And that bill now has been moved on to President Biden's desk. We have reason to believe that he will sign that in the coming days and weeks, and that will implement a ban on the import of Russian LU into the U.S. That ban is in place through 2040. There is a limited waiver process through 2027. But we're going to wait now to see what Russia does to respond to that. I suspect they will cut off supply to the U.S. immediately, and that will continue to put more pressure on the market as that source of low-enriched uranium is taken off the table for the U.S. Switching gears back to our operation at Lost Creek, just a few more points on that before we get into economics. Again, producer for over 10 years, we've had exceptionally good recovery rates, averaging 90%. That is very good for the in-situ technology. We have very low royalty burdens at Shirley Basin and at Lost Creek. They averaged less than 1% across the properties. That is exceptional. Many of our peers have royalties that run from 3 to 8%. I know of some properties that have a 15% royalty, but we don't suffer from that burden, and that really helps us with our economics. I mentioned we have a lot of room for exploration at the Lost Creek project, and you can see the surrounding areas in green. We do control all of those, and we have good reason to believe there's mineralization there based on drill results, historic and more modern. And there are several geologic horizons that have very limited exploration, yet we know there's mineralization. So we have a lot of opportunity there to go out and explore and hopefully find some more pounds. I indicated earlier that we're a low-cost producer. The proof is in the numbers. These are audited financials. I'll draw your attention to 2015 when our C1 cash cost was $16.27 a pound. That year, our all-in cost was in the low 30s. We know we're not going to get back to those numbers because inflation is real, but we also don't think we're going to be terribly far off of that as we ramp up into greater commercial production and we enjoy economies of scale. So ramp up is underway right now at Lost Creek. We've got 4 new production areas online. We refer to them as header houses, and we expect to bring a 5th one on this month. We've been improving our ability to manage wastewater. We've completed a new deep well, and we're in the final stages of permitting on that. We've been very open about the challenges of ramp up. It's not been easy, primarily because of manpower limitations. We are happy to say now we've got all of our employees. We've got 65 employees at the site. We have all the drill rigs we need, but it took us a while to get all of that manpower. The unemployment rate in Wyoming is extremely low. And so because of that, we struggled to get manpower, but we're very pleased now that we have our full staff and we are steadily getting them trained and ramping up. I also should comment on supply chain. That has been a real challenge for us, but we've been ahead of the game. But we are ordering equipment and materials 12 to 18 months in advance, and that has allowed us to have everything on the ground as we need it to maintain production. Excuse me. Looking at the green revolution, one of the reasons the price of uranium has gone so high is because it's green energy. And I'm not going to read all of the bullets here, but I do love the top one. It talks about how much CO2 our uranium that we produce will offset compared to if that energy was generated from coal. And we'll offset over 300 million metric tons of CO2 from our product. That's the equivalent of, excuse me, taking over 67 million cars off the road for a year. And we're very proud of that. You may have heard that we are heavily involved in research and development. We believe there's significant room for improvement to reduce cost of operation, but also to minimize our environmental footprint. And the top 4 bullets there, those are areas where we've had success in the past, and we're excited to continue on with additional R&D. Those bottom 2 sets of bullets are 2 projects that we have ongoing right now. R&D is difficult. We don't know if we'll be successful on these, but we're going to continue to work on them. One of them deals with a new method for installation of well casing, and the other is a method for water treatment. We want to continue to reduce the amount of water that we're using. So taking a look at the financials, our Q1 numbers just came out 2 days ago, but we've got 52.9 million in the bank as of the 2nd of this month. We are debt-free. We have 6 long-term contracts that have locked in some really good revenues. They're going to be profitable on an all-in basis as we get ramped up to commercial levels. We also have a remaining about 50% of our production capacity that we have not contracted, and we're going to be pretty stingy going forward as we look at contracting. And as the price goes higher, we may layer in some additional contracts there. Otherwise, there is an opportunity as well to sell into the spot market, although I don't anticipate we'll sell into the spot market for at least 18 months, 2 years as we ramp up production. We try to grow in some inventories as well. The build out at Shirley Basin is going to improve and increase our production capacity. Our mine capacity will be up to 2.2 million pounds per year. So here's the standard look at the company's market position. Market cap is around $500 million. Again, good, strong cash position right now. We're very proud of our shareholder registry. There are a handful of names in the uranium space that this is what they do. This is what they invest in, and they're experts on it. And I'm very pleased to say that many of our top 10 shareholders are in that list. They're uranium mining experts. And so I think that speaks to the value of our company. We've got very good liquidity, and we have for a very long time. We've had very good liquidity on our shares as they trade. That has been improving recently, and now we're over 3 million shares a day. We've got great analyst coverage here in the U.S. as well as on the Canadian side. So just in closing, a few takeaways to remind everyone: good, strong cash position. We've got great contracts in place for the next 6 years. And we'll be relying on them for some good, solid revenue going forward. We continue to see RFPs, or requests for proposals, coming in from our utility customers, and we will be responding to them accordingly and commensurate with a rising market. We are looking for contracts going forward that have collars, so we enjoy exposure to the market price versus fixed prices that escalate only by inflation. So it is now a seller's market, and we believe we'll be able to sign more of those type of contracts going forward, so we can maintain some blue sky in the pricing. So as we ramp up, we've got our core staff there that are experienced. We believe we're going to be one of the lowest cost, if not the lowest cost in the U.S. ramp up story. And there are a lot of catalysts remaining out there in the nuclear space. Geopolitics is incredibly important. It is putting pressure on the price of uranium. There is a significant shortfall of uranium production right now, and a very limited number of companies around the world that are able to step in and try to fill that gap. And we're well positioned to assist with that. The government also last year was purchasing uranium, and we were the benefactor of that. There may be some additional opportunity to sell to the government. And then also finally, and very importantly, a number of financial players have been jumping into this space and buying up uranium. There was some mobile inventory a couple of years ago. At this point, we believe all of that mobile inventory has essentially been mopped up. There is minimal left in the market, and all you need to do to prove that out is take a look at the spot market. It is very thinly traded right now. There's so few pounds out there available. So with that, I'll leave you with our contact information. I try to be very easy to reach. The best way to reach me is by the email that is there. And so feel free to reach out if I don't answer any questions or the presentation didn't answer your questions. But with that, Anna, I'll turn it over to you. Would love the opportunity to answer questions.
Thank you, John. We do have some questions for you. Jared asks, with the potential of this new Russian ban, like you mentioned, did the government set up any incentives or grants that you can tap into? So
not directly for the uranium miners, but for the nuclear utilities who are our customers, they absolutely did. When that bill gets signed into law, there will be $2.7 billion released. It is designated to enhance domestic uranium production, but it's not really designated on the front end of the fuel cycle where we are. It's really going to be designated to enrichment and conversion capacity here in the U.S. So a lot of money will be dedicated there to that portion. We do expect to get some trickle-down benefit from that as the capacity in the U.S. expands. Beyond that, the Inflation Reduction Act had some incredibly good incentives for utilities. Right now, we've got, I think, 94 reactors up and running in the U.S. Some of those were slated to be shut down over the coming years, but because of the IRA, 100% of those are going to be kept up and running. Diablo Canyon, for example, was going to be shut down in California. The expectation now is that it'll stay up and running. Palisades in Michigan had been shut down. It looks like now it'll be brought back online. And many of our customers are telling us they are looking at license extensions for 20 years, 30, 40 years. They're also looking at power uprates so they can generate more nuclear power. All of that means more uranium demand. So long answer, but the short story here is no direct benefits from that bill, but tremendous indirect benefits are trickling down from the IRA and from the Russian ban.
Well, talk a little bit about the uranium prices. What do you see the near-term uranium prices, how they're affected due to the effect of the recent legislation changes?
Yeah. So I think a bit of the that was already baked into the spot price in particular, because Congress has been talking about this for a while. But certainly when it was signed or when Congress approved it and it got moved on to President Biden's desk, we did see a $2 or $3 improvement in the spot price. I think now we're going to wait and see how Russia responds to that. I suspect they will cut off the supply immediately and not allow utilities to enjoy the waiver process. If that happens, I think we see a little more pressure, upward pressure on the spot price. And one thing I'm watching very carefully, and I'm not a geopolitician, but I'm watching it with great interest. What does Russia do to perhaps impugn or delay or inhibit production from Kazakhstan coming west? Kazakhstan is our direct competitor. And if that production in any way is inhibited from coming to the west, then I think we could see dramatic price increases in the spot and in the term. So we're watching that very closely. to see how the geopolitics evolve going forward. But even beyond the geopolitics, there's such growth right now in the nuclear industry that even if we ignore the geopolitics, I think we continue to see pressure on the uranium price going forward because there are so few uranium producers in the world. I can literally count them on one, maybe 1.5 hands that are legitimately producing. And it takes years for them to ramp up and get their permits and to be able to produce to fill that gap. So I think that gap is going to exist for a long time, and that's going to put pressure on the price.
What a time to be in this industry. Another question from Todd Howard. In what time frame do you plan to contract out the remaining Lost Creek reserves?
So it depends on where the market goes. Right now with the 6 contracts, that's about 5.7 million pounds. It represents about half of our production capacity from Lost Creek and Shirley Basin over the next 6 years. As we respond to RFPs and utilities, we are going to continue to respond. We're continuing to seek contracts, but we believe we can layer in higher prices going forward. And we're going to be more patient to get those higher prices since we've protected the company's revenue already with the first 6 contracts. So we're going to be a little more cautious going into contracts. We're going to be much more insistent on market-related pricing with a really strong floor that is very profitable and with a very high ceiling that gives us exposure to higher prices going forward. So that's kind of our hedging policy right now. Hopefully the price continues to move up and we'll just continue to layer in additional higher price contracts that are well in the money for us.
And Lewis Goodman asks again about the Lost Creek Mill. You built it over capacity on a percentage basis. So how much growth can you endure prior to having to upgrade?
Yeah, no, absolutely. The mine there, we can do 1.2 million pounds per year, so very roughly 50% of the mill's capacity. We can bring Shirley Basin in at 100% production, and it will satisfy Shirley Basin. But if we go to maximum production at the mine at Lost Creek and the mine at Shirley Basin, that will fill up the plant. We have plenty of physical room to expand. For those of you that have been to Wyoming and you saw from some of the pictures, it is wide open. We've got lots of room. We have got a great regulatory agency that we work with that we could expand the physical footprint of that relatively easy within that 10 acres that we have fenced in for that. So yeah, we can handle both Lost Creek and Shirley. Beyond that, we would need to expand the physical footprint there. We also have the option of building out a full processing plant at Shirley Basin that's already approved. It's already in the permits. We would not have to go back and get any approval whatsoever. And that's approved for a 2 million pound mill. So we do have that availability. So if we expand beyond existing capacity, we could permit at Lost Creek and grow there, or we could build out a full plant at Shirley Basin. So lots of opportunity there to grow production.
Fantastic. Margarita Moore wants you to clarify who your customers are and how are you growing them?
Yeah, they are nuclear utilities here in the U.S. as well as in Europe. So if you go to the Nuclear Energy Institute, the NEI website, it'll list all of the utilities here in the U.S. And as well as in Europe. Those are our customers. We sell for electric generation. That's really what all we sell our product for. We've not sold for defense needs, and our intention is to continue to sell to those utilities. After Russia invaded Ukraine, historically, we had not heard much from European utilities, but after that invasion, we had an influx of interest of utilities out of Europe. And so we've been happy to respond to RFPs from them, and we've actually prevailed on a couple of those. 2 of our 6 contracts are with European entities, but they saw the value of safe jurisdictions such as Canada and the US where we operate. And so we've been getting a premium in our contracts for our production because of our jurisdiction. And we've been specifically told that by our customers.
Corey Logan asks, do you know how many metric tons you might produce in 24?
So 2024, we typically measure in pounds in the US, metric is in Europe. But in the US here in Lost Creek, we're looking at producing around 600,000 pounds of U3O8. Next year, and that would fill our contract book for this year. Contract book is 570,000 pounds. Next year, we intend to continue to steadily ramp up. Our contract book for next year is 700,000 pounds. So we would love to do 800,000, 850,000 pounds next year, begin to grow inventory and give us the opportunity potentially in a year or two to sell into the spot market.
And Nicole Jones wants you to clarify, is this technology to reduce the uranium to a pump-able solution exclusive to UR Energy?
No, it is not. The technology was developed in the U.S. in the 1960s. There were patents on it way back in the 60s. All of those have expired. And now the technology is used around the world. It's used in Kazakhstan, most notably, Australia, the U.S. I suspect it will be used in Mongolia and is also used in Uzbekistan as well. So yeah, no patents, although the technology was developed here and spread from Wyoming around the world. So we are working in the home of the technology.
Wonderful. Well, John, we would love to give you a few moments to give our viewers some closing remarks.
Yeah. No, I really appreciate everyone listening in. Certainly is an extremely exciting time in the nuclear space. I've been at it for 30 years, and I would say the last 2 years have been the most exciting time in the space for me by far. We would encourage everyone to take a look at uranium miners, including UR Energy. And if you've got any questions at all about what it is we do, please reach out. Glad to have a conversation. Really excited about UR Energy and what we're doing here in the future.
Wonderful. Well, thank you, John. Fascinating time and industry you're in. Please join us again in the near future with some more updates.
All right. Thank you, Anna.
All right, everyone, stay with us. We'll be back at 1:45 Eastern with Region Biopharma.